everybody. Salute to all you guys who are watching, man. I'm coming at y'all with a brand new video. It's been a little minute since I posted here on the YouTube. Probably about a week now, but we're back again, man. Got some value for y'all. Got some trades I want to walk y'all through. I took a trade on GBPUSD as well as a trade on EURJPY, and these were both longs. Extremely clean trade setups. I'm still in GU, right? The trade you see up on the screen right now, something I'm still sitting in. But EURJPY, this was insane. Let me just say that this was an insane trade. I actually secured this trade, and I'll go ahead and throw some screenshots up of both of those positions kind of as they went on. I posted a little bit of it on my Instagram. If you haven't followed me on Instagram yet, make sure to hit that link down below. You'll see a link to it. Hit me with that follow. If you want to contact me, you can hit me up there. I respond to pretty much all my DMs whenever I get a chance to, man. But make sure to leave a like on this video if you do enjoy. Like I said, let's go ahead and get into it. I don't want to waste any more time. So GBPUSD, right? We're currently sitting in this pair. Sitting in some open positions on this pair right now. We are running about, let's see, about 40 plus pips in profit on this pair, which is very good, right? I called this entry out. I called it as a signal, and we took this yesterday evening, right? We took this yesterday evening around noon. I believe it was like 1 o'clock. We took this entry, and right away, you know, we pushed up about 15 pips. We came back down to break even, and we pushed up about 25 pips. So, you know, I told everybody in my chat, look, this could be somewhat of a swing trade. We're gonna have to be okay with, you know, fluctuations back and forth, but for the most part, I'm looking for some bullish strength. So they had many reasons I was looking. There were many reasons I was looking to go long on GU, not only technically, not only from a market manipulation standpoint, but from a fundamental standpoint, looking at the outlook of the GBP potentially catching some strength on this pair. A lot of things going on with Brexit, but right now we're still in this position. So as I'm talking, I have open position fluctuating back and forth, but you can see that we ended up going a little bit into profits, and then we ended up pushing down. So we pushed down about 48 pips. Now I want to talk about the psychological aspect of this. You might be up, right? You might be up 25 pips, and then all of a sudden price reverses against you. When something like that happens, one of the major things you can do is stick to the plan. I cannot stress it enough. If quick movements scare you, man, you have to do the work and understand that Forex is volatile, man. These spikes will happen out of nowhere. So be okay, right? Be okay with things like this happening. You already know this is going to be, you know, your potential exit area. So as long as price isn't pushing below it, don't even worry. You know, because a lot of times the trades that end up going in a drawdown before it goes into profit end up being the best, you know, returns. Now, of course, the best option is a sniper entry, pushing straight to your take profits. But very often, if you get a trade that pushes a little bit into profit, it'll reject on you right away. I realize when I'm in drawdown, sometimes that's when my trade bounces back the best. But yeah, man, let's go ahead and get into this analysis. I don't want to keep talking like blatantly here, but in terms of what I got going on with the indicators, right? I have the high-low day box as well as the EMA. So with the highs and lows of the day, it's telling me, it's just kind of giving me a clue of how I could potentially catch the low of the day. So when I'm trading, I'm looking to catch the high or the low all the time. I'm not looking to enter in the middle. I'm not looking to scalp a movement in the middle. I'm looking to always enter either at a place like this or a place like this. You know what I mean? For me, there's no reason for once price breaks out of this EMA to go ahead and buy into it. You see what I mean? Because then at that point, you have, you know, talking about different standpoints here, you have people selling on this trend line, so that might confuse you. So me personally, I'm only looking to catch the highs and lows. That way, if I get in right here, I'm okay with these fluctuations, you know, these major spikes, because you have to think, man, the strongest spikes in the market, right? Quickest movements usually happen in the middle. You have like boom, whipsaws back and forth. Usually once price bottoms out, you can catch that move, and then you have a little bit of consolidation after the fact. So that's what we have going on here. Contraction, right? Very simple contraction phase. This little consolidation area, this is what I called a pressured contraction, right? A bearish pressured contraction. Basically that consists of consolidation into the, see how the 20 moving average is curling down, are really pushing to the downside, kind of, you know, went a little more steep on us. What that's telling me is that this area here is pushing bearish pressure into the market, since the candlesticks cannot close and they're really rejecting off of it. So from that point, I was expecting a strong move down. Now we ended up having a pullback around here. We know we're gonna have retest traders looking to catch another move to the downside. We whipsaw right through there. I don't know if that's even considered whipsaw. We just pushed up right through, and we have, you know, a solid phase of contraction. Then we have an expansion. So we have to think, once this contraction occurs, what are we gonna have, right? Once price pushes down, we're gonna have liquidity. We're gonna have people looking to sell, people looking to buy off of that. We're gonna have people looking for different types of orders so that they could capitalize on. So after that occurs, we push back to the upside. So this is my contraction phase, right? This is verified contraction. Once you realize that the contraction has occurred, you want to wait for some type of pullback. So not only do you want to wait for a pullback, but you want to build a bias. You know, do you want to sell off the contraction or do you want to buy off the contraction? In this case, I wanted to look for a reversal, which would have been me buying off of it. We see the contraction occur after the expansion, like I said in previous videos. Contraction, expansion, pullback for that follow through, right? A lot of manipulation right here. We want to understand, you know, at the same time, keep it simple. We don't want to overcomplicate it, but we want to know where we're getting in. So we see a clean formation, push back up here. What I did was I took my Fibonacci, right? It's on the Fibonacci 618 golden ratio. A little bit of consolidation, went into a little bit of drawdown. This ended up being the low of the day. Like I said, I'm always looking to catch the high or the low. Double bottom right here, came down, snagged that double bottom, came back through, came up for the pullback. You know, looking back at this trade, even though I'm still in the trade as we speak, the best possible entry opportunity, or the cleanest one, would have been right here, right? Because you can see we kind of build up a little level of mini support. And then what we do here, right, is we come down, we grab this retail liquidity, we make a new low of the day. And then if you take Fibonacci from here to here, look how beautiful that was, 786 retracement on the previous support. So that would have probably been your best entry. But like I said, it's a semi-swing, so I was okay with, you know, the back and forth movement that was coming with me taking this position right here, man. So that's what we have going on. Entered in the evening, and right now I am up as we speak around 40 plus pips, right? Around 40 plus pips. I have two positions. I have one position right here at the 618, a little bit more, a few pips above. So that's what we have going on. In terms of what I'm looking at for the future, right, I just want to see how it reacts to this level. This is going to make or break this trade. It's currently Thursday at 6:43 p.m. So whatever's going to happen in the next few hours within this time span is going to give me a good outlook of whether or not the GBP is going to be strong enough to push above this level of resistance, right? So obviously we have a bullish outlook. We want to see this level taken out eventually. You can see 4 times in the past separately throughout the last however long this was. We struggled to break above it, but what I actually like here is the fact that we've been consolidating above the 20 moving average, and we just had a fairly strong bullish candle, and this candle here is actually rejecting and potentially closing as a bullish hammer, right? So yesterday we bought off the low. You know, we bought off the low for London session. Started in you know, mid lunchtime, but you know, we waited for the market to do its thing, and it finally gave us a little bit of traction here, and we are moving in nice profits, right? We're in real nice profits, 40 plus pips. So that's gonna be the first trade. Camera battery's getting a little low. I keep recording with a low battery, but I'm gonna make this quick, man. EURJPY 15-minute time frame, straight sniper entry. 15-minute time frame, like I said, go down to the 5-minute for a closer look. This was definitely a very insane trade. Took the entry right here, reason being, I actually got real up close with this trade, went down to the 1-minute time frame, and what I did here was I marked out this previous level, right? We can see that price wicked off. So you know, usually when I see a wick, I won't include the whole thing. Like I won't really draw this down here. I'll kind of find like a, you know, an area where prices reacted afterwards. So, you know, to add it up here, I just kind of put my zone around this area. And what I've seen is that price closed above the zone, right? And then once it closed above the zone, you know, we pushed off very strongly. And structure is structure. That's something I want y'all to know. So whether you're looking at the 1-minute time frame, the 15-minute time frame, structure and the way price moves, it's gonna move that way based off how it's reacting to certain prices. You know, even if you want to look at the 1-minute time frame to practice and look at how price moves in real time, you can do that as well, because the way structure works on this time frame is going to work on higher time frames as well, except for one thing, right? It's going to happen in a lower time frame, but keep in mind it gets more volatile as well. I'm not going to get into all of it, but it's the 1-minute time frame, so it's going to be very similar in terms of structure, but in terms of the movements and the trends, it'll be a little bit different. But we close below this level, we get bullish, we break this high, right? First entry opportunity would have definitely been right here. I missed this entry, keep that in mind. This was a very clean setup. So yeah, we pushed up, we come for the pullback, and then what I did from here was I took my Fib retracement. Like I said, I love using Fibonacci, and I entered a little bit below the 618. Why did I enter below the 618? Well, I seen this candle close, and what do we see happen here? Beautiful rejection candle, right? Beautiful rejection candle right here. Candle closes, what I do, place a buy order right here, push up, begin to trade above the 20 moving average, kind of rejected off of it a little bit, and then we begin to push up. This is another thing about psychology, man. I only had a 4 pip stop loss right here. I could have been very stressed out if I let the market get to me. Like I said, things are gonna happen. You know, we came back down, we didn't really hit entry, and then we followed back through, and this ended up being a 1 to let's see where we're at, a 1 to 12.54 trade. So me personally, I secured this up here around this double top, right? Actually, let me move it down a little bit. I secured it, I believe, right here, right after that ended up occurring. So that was like a 12.15 risk to reward. So obviously, you know, percentage based risk, if you were risking 2% on this trade, you could potentially be looking at a 24+% gain on your account, man. So extremely clean entry. Like I said, was also looking for some euro dollar to come through, right? Looking for some strength to come through on that pair. We kind of faked out below, pushed to the upside, and back in with a high low day box. You know, if we come over here, let's go up to like the 15-minute time frame so we can see this a little bit better. I've really been using this little tool a lot here lately, but if you look at this little small indentation here, that shows that price wicked, you know, at that low previously, failed to close below it, and then where we holding up a little bit higher. So that was like a first clue, you know, maybe if I get some confirmation here, that would look like a very nice potential trade opportunity. 4-hour time frame met with some very strong support around this previous level. So GU, super clean, like I said, contraction, expansion, manipulation setup. EURJPY was fairly simple, a little mini push below the low before coming up, then entering on a pullback 618, and then NZDJPY. I don't even think it's a trade I took recently, but it's a trade setup I'd still like to walk y'all through. So we're looking at a 30-minute time frame. What we have here is demand, right? Call this a demand zone. You can work your way up to the hourly, maybe even a higher time frame than hourly to get a good look at the demand, maybe the 4-hour. Here we go. And something I like to do is when price is strong, right? See how I traded below the structure, being that we wicked off so strongly, something I like to do is I like to draw a box around the wick, and I like to see how price reacts to it. So you see how we kind of wicked off around the same area as previously. I look at this as potential demand. So if we come down to the 15-minute time frame, we take a close look at this. What do we have? 2 levels of structure. So something I like to do, I like to look at these previous levels of structure. That price pulled back, you know, pulled back and then rejected. It was acting as resistance, and then we pushed through with a very, very strong bullish momentum. So when you're looking for longs in this case off of a potential demand, realize that demand means you're looking to buy, right? That's your bias, but you want to make sure you aren't buying into a strong level of resistance, because if we look right here, price rejected off the past, in the past, and then what do we have here? Most people are selling. You know, you don't want to buy into that, because you don't know if price is just going to continue to the downside. So you need to find that distinguishing factor that's going to allow you to know, you know, do I really want to sell on this resistance here? You know, build up the confluence. We see this as a demand zone. Price broke this level of structure. I entered on a pullback, Fibonacci retracement as usual. 50% retracement on this one, different reason, but super clean entry. Like I said, there you go, bullish candle, indecision candle, another follow through, a little bit of rejection, push, break, retest, follow through to the upside, and then what do we have here? Retail liquidity. Anyone looking to sell this retest. So you have to know, and you have to find a common balance of when you want to go against the retail herd and when you want to go with them, right? You don't have to go against them every time. But this case, you could have went against them for different reasons. You know what I mean? You could have targeted these levels up here as potential liquidity, and then keep in mind, where is your entry? Low of the day, you know, retracement off the low of the day. There's multiple ways to approach the low of the day. You can buy straight off of it, but then again, you don't know this is the low, so you need confluence for that. You know, the low of the day is only made once price comes back up and it decides, right, and then new fresh day is opened up. So that was kind of like a clean setup here. Super low risk, very large reward. So that's gonna be my trade opportunities, man. Hope y'all enjoyed this video. It's been a little minute since I posted on the YouTube channel. It's been your boy BGFX. Hope y'all all doing good. Good luck trading the rest of the week. It's only Thursday. If y'all have a trade y'all looking at to catch, you know, good luck on that. I'll catch y'all whenever I, you know, find another trade setup. I'll hop on here and walk y'all through it. It's been your boy BGFX, man. I hope y'all have a blessed day. I'm out. Salute.